Ira Jersey, let's talk about European corporate bonds post-Brexit. Immediately they sold off, but they really have come back. So is the worst over? Was it a non-event?
Well, I think for investment grade corporates in Europe, they are. Maybe not quite as much in the UK. But we have to remember, a lot of the issuers in Europe are multinational issuers. So they have diversified portfolios of businesses. So their revenues and sales probably won't be that impacted by Brexit itself.
Well, there's a lot of worry about European banks right now. The stock prices have really come down, but you are positive, constructive on European bank bonds. Why is that?
Well, so in the International Bond Fund that we have at Oppenheimer Funds, we really focus on the fundamentals of the companies and looking for yield and attractive opportunities. And one of the things about European bank bonds at this point is that they're stable companies that are not likely to default. So, and when you can get 5, 6, 7% yields in some cases, they look very attractive. You need to be selective though, because there are some banks and in some countries that can be very risky. Italy, for example, we only own the large banks that don't have the problems with loan losses within their portfolios. The smaller banks that do, we're avoiding.
And you were underweight the British pound heading into Brexit. That was another prescient call. So where are you on the euro, on the pound? Give me your currency outlook for your bond fund right now.
The British pound is likely to continue to have some issues as their growth continues to slow, as the Bank of England continues with their easy money policy versus other currencies, particularly the dollar. The euro we're a little bit more neutral on, whereas the yen in particular, we're actually along the yen because it has been a flight to quality currency. We're still underweight versus our benchmark in the International Bond Fund, but we continue to be constructive on the yen in general.
Let's talk sovereign bonds, especially from both Japan and Germany. Negative interest rates, negative yields. So can you talk about the impact on that on running a portfolio like yours?
Yeah, so in the international debt team at Oppenheimer Funds, we are as underweight as we can be the Japanese government bond market. Negative yields where they are, we view as a Ponzi scheme. It's just the fact that you have to lend someone money and pay them for the right to do that just doesn't make sense to us. Now, there are reasons why central banks are trying to do that because they're kind of running out of options of what to do. But we think that it will only be effective at the margin, and at the end of the day, we're looking for other opportunities, better opportunities, higher yielding countries.
Now, I know we've been talking about Europe, but all eyes are on Brazil right now because the Olympics are down there. So finally, what's your outlook for Brazil? That country, in terms of their politics and their economy, has really been beaten up. Is the worst over for Brazil?
We do. We think that the political issues that had been haunting Brazil for a year prior to May really are starting to fall behind. There seems to be some positive governmental actions that are occurring, and we really think that there's good opportunity there, particularly for fixed income investors. So it shouldn't be the largest portion of your portfolio by any stretch of the imagination, because it will continue to be volatile. But with double-digit yields and a higher rated high yield country, we think that there's good opportunities there. We own their bonds in Brazil. We also own a little on and off. We've been trading in and out of the real.
All right. Well, thanks a lot for coming on and talk about it. And thank you for watching The Street.